Hello guys, welcome to the Trading Parrot. Bitcoin has just won a small battle on the 4-hour and on the daily time frame. It is a small battle, but indeed it is quite important. We're gonna look into what has just happened on the liquidity pools, and we're gonna keep a focus on what is the likelihood of the next resistance rejecting us and what could be the next level down if we fail to defend the battle that we just won. I'm gonna cover a new indicator that is becoming part of my arsenal called the Bitcoin Exchange Inflow-Outflow Ratio 30-day moving average, which is currently showing us that we are at a peak of high demand in exchanges in the past 30 days. And of course, stay for the end of the video because that's where we do the deep surgery into the order book, and I'll share what I have found so far. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And you can tell how close we are getting from those 1,000 likes in a single video. Yesterday, on the main video of the day, we got 700 likes. Some days we get closer to 900. I know that we will get there. It's incredible how the views are increasing. For example, between these 3 videos yesterday, it's around 10,000 views, while at the same time the interest in Bitcoin continues to go down on Google Trends, showing that retail has thrown the towel. And this is a double win for the channel and for Bitcoin. For Bitcoin, because retail going away and entering in fear signals that we are getting closer and closer to a bottom. Markets do not peak at the lowest interest, they peak at the highest interest. And number 2 for the channel, because we are having a divergence. People are coming to the channel to learn more about trading, and that small amount of retail left is joining the channel, which I really appreciate. Typically, when the interest in Bitcoin goes down, my views get damaged and hammered big, but it's actually been the opposite at the moment. Anyways, just sharing a small victory with you guys. It is exciting. We start the day and we see that the inflation rate in UK has increased. Prior, it was 2.5, and an increase to 3% is quite a big one, especially considering that the forecast was just 2.8. We have coming in the FOMC minutes later today. As I mentioned, this week is not as heavy in data relative to the previous week, which is also contributing to keep the price still at the same range. And one of the biggest news that people are talking about, and I've seen in the comments so many people asking me to do some review on Solana. I'm probably gonna make a dedicated video on Solana. Let me know in the comments if that's something that you would like to watch, just Solana, or if you prefer one of these videos where I review many coins together, including Solana. And I find interesting to see in the comments in the videos yesterday, many people saying, you nailed the 93K. Some other people were saying, well, you bought at 97K, so that shows that you have no clue what you're doing. I have never bought at 97K. I have the feeling that there are multiple dimensions and people are watching a different Trading Parrot that has long hair somewhere. Double check your facts, get an appointment with the doctor and see if you're really seeing the reality. Because I have never said that I bought at 97K. Neither yesterday I was bullish on the price on the short term. I am bullish on the longer term, on the higher time frames. I am telling you to prepare that entry, that sweet entry with higher volume to take advantage of this liquidity. This is a longer play. On the shorter term, I keep shouting that these patterns on the 15 minutes are just BS and that most likely we're gonna hit that 93 based on liquidity pools, based on the excessive ratio of leverage of the longs, the mild bid that we were seeing of just 0.10, along with other factors. Anyways, I'm gonna make the video for the people that are actually watching and paying attention. There is increased liquidity coming in. There are a few longer term signals that are telling us we need to be looking for longs. I am already in a long, low volume at 95.2. I say that regardless to go to 93, I'm still gonna hold on to that long. I'm gonna ask ChatGPT to summarize this written for someone that has the maturity of a baby. Maybe you're going to understand it. I mean, most of the people do understand it and the comments are incredibly positive, but there's always someone that has no clue what he's watching. watch my video from last night, I have some small doubts on this particular alpha applied to the aggregated open interest on playing out. I'm still monitoring it because it's coming from the top to test the support of the aggregated open interest at 29.5 billion. So from that end, things are looking very similar to the pattern in August, but we have here a divergence against the price, which we didn't have in August, that is kind of making me think whether I'm still tracking the same pattern or if this situation is completely different. And I'm telling you why. Open interest increases and price starts to go down. That could be indicating excessive shorts, which could be something positive against an hypothesis of a short squeeze. But that is not what we did in August. In August, we reclaimed the support and price put higher lows, which is not what we're doing in this area in here. You can see that price has come down in the same range. Anyways, we'll continue to keep an eye still. For February, we are minus 6.35%. We still don't get the hash ribbons by signal. Let's go with the 4 hour. Yesterday, we pinched below the percentile level at an RSI of 27. We went, I think, to 22. And you can see that we were below the RSI of 27 for a minute. Notice that the small battle that I'm saying that we won yesterday is on the 4 hour and it is on the daily. On the 4 hour is a mixed bag because, as I said, before we reclaim the red line, we have to hit the resistance at 38, I call it. We did it so quick in a single candle after the video at 41. But my point was we need to hit first the 38 so we can have a rally into 51. And here is the good and the bad news. The good news is we did it, and most likely we reach the resistance at 49, not at 52 or 51 because we did it too quick. The resistance is this symmetrical triangle that rejected the price once. That's not a big deal. The big deal is that we are just hovering below that resistance, and this specific setup for me is a typical setup that I play as hit the resistance and then continue with a channel down. That is the highest likelihood, and I have to share that with you. That is my opinion, and that's why in order to invalidate that highest likelihood scenario, we need to do what I drew yesterday, which is breakout, retest, go into the resistance and reclaim it as quick as possible. So if we do something like this and reclaim very quick, one, we're gonna reach levels where we are gonna start putting itchy all the shorts and start liquidating them, so things could go even faster after that to the upside. If we start hovering in here and putting bull flags that take too long, we are kind of confirming the most likely scenario, which is a rejection after having lost the support. That's why today is critical to monitor the reaction against this resistance of 51 on the RSI 4 hour. That is where we should put the eyes for the shorter term in the analysis. Looking at the price action as well, we are below the support on the trend line, and you can see that the support of the PNR and the global support of the RSI represented by this yellow line, in case we went for a full reset on the 4 hour to 18. So we have 27 and 18, and I already put that last night in the video in the chart. If the price meets now with the resistance on the price, which is at 96, and gets rejected from there, notice that the rejection could be one of these weeks that you're seeing in here. So price could go high, get to 97, and then see a strong rejection and back below 95.8. That will be extremely painful and confirming that we could go back down for a retest of where we have now the support of the RSI PNR and the global support. So thanks to the price moving back up with a green engulfing candle, which is bullish, now the support is at 92 on the PNR. Before, yesterday it was at 93.7, but the move up has pushed away support to 92K and the full reset to 87.5. So stop and think how you're going to play this. There are multiple setups here that you can take advantage. For example, pinching above 97 and seeing weakness on lower time frames could give us a repeat of one of these rejections from the top that, as long as you manage properly your risk and you put a stop loss somewhere above it. From those highs, if the short plays out, it could go for a full reset to the low 91s or to the 87s, 88, where I'm interested in buying in case we go there. If we reclaim things as I explained on the 4-hour at the top of the symmetrical triangle on the RSI, that means getting somewhere around the RSI 58, which brings us around 97.1, and that puts the price closer and closer to where we have, there you go, a CME gap. So whether you are short or long, there are setups that can be played in here. For example, price could go to 97, close the gap at 97.2, and if you are really short on Bitcoin and you are itchy to enter from there, you can get another one of these entries at the top of the range, expecting a rejection. If you are wrong, you hit stop loss and you move on. Being above this level, getting to that 97k could also ignite interest for the top end, which could be a great idea to long. Crazy. Yes, I've done trades like this where I take one and the other one. One hits a stop loss and the other one rises quite long, compensates for the other one. So you see, there is a difference between saying it can go up or it can go down. What if I told you that it's not about knowing that, but I'm knowing setups based on that being true that can still put you in profit every time? Anyways, let's go to the daily because we have done some great things on the daily as well. Yesterday, I have the feeling that I say this in the video, I prepare you psychologically when we were below this level for the potential to reclaim it. Because reclaiming a range is always bullish, whether you do it exiting from the top and coming back below it, or exiting from the bottom and coming back above it. Yesterday, we reclaimed 94.8, which was where we had this trend line of support. And now this range, which is a smaller range within the larger range of the daily, the larger one is from 96 to 103.6. So we have reclaimed the 94.8 on the daily with a daily close. Today we are above it with a green candle. Potentially, just potentially, this could ride to the top of the range. We have done that plenty of times in here, and that's the whole point of the theory of trading ranges. You exit from one end, you cannot hold it, come back inside, aim for the other end where there is again low volume. Same thing is happening here, so that is calling for a rally into 100k. On the weekly, we are still holding the support of 93.6. We got a liquidity hand on the top end at around 110 that has come back down to the bottom of the range, and now price needs to decide whether it's gonna break down and carry on below the bull market support band and potentially to the technical target of 80k, or if it's just gonna grab also liquidity from the bottom end, potentially getting us a rally at the top of the range. Think about this. We have this liquidity hand already into 91.3, and now this week the low is 93.6, which is on the weekly a higher low relative to this. So the setup and the likelihood to go to the top of the range, it is there. It's not non-existent. So you can take those chances and start building your long if you haven't already. And what I mean by building is scaling up little by little on levels that are important. The bottom of the range on the weekly, I already have an order there. If we go to another level, let's say middle of the range of the previous range, around 89, 91, then I could get more in case we reclaim the previous range in a bull market. Panic sellers continue to sell at a loss. We are at the bottom end of the SOPR. That to me is another data point that remains bullish. And this is a new chart that I want to bring in because it is not consistent with what I'm seeing from other sources. I'm talking about the Big Whale Explorer. This one is saying that large whales have been depositing into exchanges around the 6th of February. Since then, there hasn't been much activity. This one is not specifically large holders, but everybody. And it shows that there is high demand in this area of the bull flag where we've been for the past 3 months. How much? Well, you can see that it's constantly around 100k, the demand in here. During the FTX collapse, demand was also quite high. And so it was in 2017 in February before the last leg up, and in 2021 around September again before the last leg up, before the all-time high of the cycle. So it is an interesting take. I don't know if I can really fully trust this specific data. It's just another data point. And we are getting kind of the opposites on the ETFs. Very small outflows, but very consistent. We typically see numbers way larger when we are in the positive. These are in the negative around the 100 and 200, sometimes 60s and around here. Yesterday we have precisely 60, and you can see how that is flattening the all-time high in the curve of cumulative flow. We are entering back into the fear in the fear and greed index, and you know what is our routine. When we get into the extreme greed, we look for exits. When we are in the fear in a bull market, our responsibility is to look for longs. We get ourselves 2 cups of dark, strong coffee, we down them, we find ourselves a mirror, and we slap ourselves at least 3 times in a row. The whole point is to remove those excessive emotions of fear. When we are in fear, you are not allowed to share that fear with the rest of the people if you want to be a successful trader. And when everybody is in extreme greed and having their party, you are not allowed to enter into that state of greed. You should slap yourself until you start feeling fear and start looking for exits. If you cannot manage to do that, increase the number of slaps until you achieve the final goal, which is to have a level-headed mind, sharp, full of logic, data points. This is science, guys. I mean, it doesn't need to be science. Even if you don't want to trade with science and data points and you just want to trade small patterns, those emotions are not going to be your friend to take the best advantage of the market. All right, let's go into the liquidity pools and let's see what's coming up now. You can see that we've been in this flag that is probably very easy to spot on the daily time frame, 4 hour, 1 hour, and I'm using here 15 minutes. We went for the 93.5. We have that out of the way. Since then, longs have entered there, and you can see how the 93 is now becoming thicker. Remember, if you've been watching my videos, this area in here, the 95.2 is where I enter, and that was in extreme red at the moment I entered. After that, this became red, and when we hit it, it was more red than this one. And now the 93.9 has become a lot more red than everything else. And the problem is that with every low that we are putting in this flag, longs are entering more and more aggressively. Eventually, once they throw the towel, you're gonna see a level that doesn't become that big. They kind of lost hope on being able to take advantage of this, and they're just gonna let it go. At that point, potentially the flag is not gonna come and grab the next low. At the moment, you can see as soon as we entered to 93 that this started increasing. It's not as big as this one. But again, let's look at the liquidity once the price starts doing this, because at that point is where the red starts increasing. So if we start coming back down in here, the longs are gonna get again extremely greedy around this area, and we might get a repetition of the same thing. It's all to do with what they do. They do things and they make areas too attractive, and the price goes there. Remember yesterday I mentioned this area in green in here that created a continuous of liquidity incremental into the red that made it just too easy to lose the support and go and hit the pool. On the top end, this vacuum in here is where we need to convince more shorts to place the risk. We need to turn it into a continuous, number one. There should be at least some green, so this should grow into something like this, as big as that. Therefore, we get that continue that we can cut like butter with a warm knife. And the reason on the longer term I am bullish on these highs in here is because there is still a lot more liquidity than in the low end. You can even see in here how the liquidity drops as you go lower. You can come to these levels, but really market maker needs to allow all these people that are currently in a short in here to enjoy potential profits coming in there. Then they close the positions and then they cannot manage to go back up and hit them. So that is kind of the idea. Do not forget that if there is a general market big correction, all this due diligence or this modus operandi of the market maker gets cancelled and they just crash the price and they actually let all these people take those big profits from their shorts. Liquidity of the past 30 days, you can see that we have again increased. Now we have that 92.1, the 93 one, and the 95 below us. We have a dense amount of liquidity up until 100K, and then we need to jump into 106 to get the next larger area. The cumulative continues to grow very sharply as we increase in price, contrarian to going below the price. So order book surgery, let's start. Things that are bullish and things that are bearish. I'm gonna rescue all those things and see if we can find a bias for the shorter term. You know my bias for the longer term because I am already in a long, building that long. That's my bias on long term. On short term, we are in a dangerous area in here because longs continue to be over leveraged. This ratio is sending a signal that has played out multiple times in the past. If you focus on the red bands, those are areas where they were betting on too high leverage. Areas like in here, longs were at extremely levels of leverage, and that most of the time ended up resulting in additional correction. So that is just a single data point. Funding rates are high relative to the past 1 month, we could say, so there is no alpha from that. Longs continue to hit very high levels. Yesterday we hit 71, which is quite elevated. We haven't had that much longs since Christmas, and when that is in confluence with the price coming down, they tend to mark a local low. That happened on 11th of February and also on 18th of February yesterday. Yesterday in the evening video, I was flagging that we were at 18 on the bid. That's the highest we've been since the 10th of February, and it has been multiple times enough to mark a bottom, but it's not that high to trigger my signal. My signal is this green one in here when we reach above minus 0.20. But I made sure that you were aware that we were just 10% away from hitting that buy signal. Maybe in intra candle when we went to 93, the signal appeared in green, and then on candle close it disappeared just because it was a weak signal. With the move down yesterday evening, we saw 300k of shorts in higher risk coming from the delta of liquidations. That has cooled down now back to 169k. And finally, we're seeing something interesting. You can tell in here that when the price hit around 93k, the brown whales have woken up. And that is something because since around early February, most of the bullish action has come from very small pockets of just 100 to 1k. If you follow this orange line, you can see that it's the only one increasing and increasing. And the brown whales woke up, but then they sold immediately on the 17th. And yesterday there has been a decent move up. This is normalized. It exaggerates the move, but be aware that we might have in our favor the 1 million to 10 million whales. They haven't sold, they are just there in a position, and the 100k to 1 million, which are my preferred pockets to follow, still don't do any major activity. Liquidations yesterday reached 116, not as much as this lower low of 91k, neither when we went to below 90s on the 13th of January. So far, this was the most painful liquidation when we went to 91k. If that 93, 94 holds, it could become hopefully an uptrend, but to do so, we need to take the highs. This is just an uptrend in terms of the lows, if you want. In terms of fair value gaps, last night we saw a fair value gap that ended at 95.3. That is obviously gone now with the V recovery of this range. Now we have fair value gaps overlapping with the CME gap spanning up to 97.4. The CME gap on Binance ends at 97.2. So that overlap is the one I'm looking for. It's not a big uptrend, but I really want to go there and beyond and hold those levels to start talking about a breakout to the upside with further continuation into additional fair value gaps. That's kind of the plan. It's been incredibly slippery, full of fake outs like this one, like that one, all over the place fake outs. And that's why I prefer to just enter with that small order and stay out of that noise. You can tell that I'm not opening the order, closing it, opening, closing, closing, opening, because that creates a huge mess. I put on the table my plan plan, I stick to it. Part of the plan is I don't have time to be doing scalping. This area was incredibly great for scalping, particularly if you were trading these extremes of the bid and ask. You get to 0.1, you buy, you get to -0.1, you sell, and you can carry on, rinse and repeat this whole range with a very high accuracy and possibly no stop loss hit. But you know, that will take me all day for trading, and for that I need to really close down my YouTube channel because I wouldn't be able to scalp and to have a YouTube channel. Impossible. Guys, if you want to trade Bitcoin and altcoins, my two preferred exchanges are Bybit and OKX. At the moment, I have rewards for 30,000 on Bybit and 60,000 on OKX. By using the link in the descriptions, you unlock them, and also you reduce your fees, trading fees, to a minimum. If you're looking for exchanges that don't require KYC, I've got two options. One is Bluffing and the second one is Tubit. Either of them are doing great promotions. Bluffing at the moment is offering 100,000 in rewards and Tubit 30,000. All of these rewards are based on trading volume and deposit size. Remember to comment down below if you want me to do a dedicated video about Solana or a dedicated video about any other important coin at the moment, or if you prefer me doing just a combined video with possibly 5 or 6 coins together, and which ones you prefer. Thanks so much for watching the video. I'll see you in the next one. Bye bye.